Hey everyone, welcome back to the Deep Dive. We're all about getting you up to speed quickly so you can cut through the noise and really understand what's important. And today,
Yeah,
today we're diving into a really fascinating South African investment story.
absolutely.
You know, sometimes you hear these stories that sound almost too good to be true,
Right.
like turning a small investment into a fortune, and you think,
Yeah.
is that really possible?
Mm-hmm.
Well, today we're going to break down one of those stories. We're taking a deep dive into a My Broadband article titled, and this is a mouthful,
Yeah.
The R1000 South African Investment That Would Have Made You a Multimillionaire.
It's a catchy title for sure.
It is. It grabs your attention, right?
Definitely. And it makes you wonder, how is that even possible?
Exactly. So our mission today is to understand how this incredible growth happened. How could a relatively small amount of money, like 1,000 Rand, turn into such a massive return?
The key to the story, according to my broadband, is the phenomenal performance of Capitec Bank. Yeah. They found that a R1000 investment in Capitec Bank, when it was first listed on the JSE, the Johannesburg Stock Exchange,
Imagine that, right?
yeah, back then, would now be worth, get this, approximately R 5.6 million.
My 5.6 million.
That's life-changing money.
It is. From 1,000 Rand, it's mind-boggling.
Yeah. And it really highlights the power of long-term investing.
Long term, for sure.
This growth has taken place from the time Capitec was listed on the JSE up to February of this year, 2025.
So we're talking about over 2 decades of consistent growth.
Exactly.
Now, I think it's really interesting to consider where Capitec started.
Mm-hmm.
It was founded in 1997 by Mikio Leroux, and for quite some time, their business model was largely unchallenged.
Yeah, they operated in a space where they didn't have a lot of direct competition.
That's so crucial, right?
Mm.
Finding a niche and really owning it. But what was it about their initial approach that allowed them to stay ahead of the game for so long?
Well, the My Broadband article touches on this, and it seems their initial focus was on providing accessible banking to people who are often overlooked by traditional banks.
Okay.
They offered lower fees and more flexible services.
Makes sense.
And this really resonated with a large segment of the population.
So they identified a need in the market and they filled it in a way that no one else was doing.
Exactly.
That's smart.
And that early success, that foundation they built, really set the stage for their incredible growth on the stock market.
They've been called the best performing share in South Africa since 1994.
Since 1994.
It's saying something.
It is a testament to their consistent performance over a very long period.
Now let's talk about the scale of their operation today.
Okay.
As of last year, 2024, Capitec had over 22 million clients.
Wow, 22 million clients.
That's a huge portion of the South African banking public.
Yeah, it's remarkable.
And that kind of customer acquisition is obviously a major driver of their financial performance and ultimately their share price.
Mm.
The trajectory of their share price is just remarkable.
It really is.
From around R0.75 in February 2002
R 0.75.
to over R3,000 per share in February 2025.
An incredible jump.
That's not just growth, that's astronomical.
It is.
What do you think fueled that kind of rise?
Well, customer acquisition is a huge part of it, of course.
Right.
But it's also about how effectively they've turned that growth into profit and how they've maintained investor confidence.
Okay.
Their ability to adapt to a changing financial landscape has also been key.
They haven't just stayed still, they've evolved.
Right.
And if we look at the bigger picture, their market capitalization really illustrates their dominance.
It does.
They have a market cap of R350.24 billion.
R 350.24 billion.
That puts them ahead of Absa and Nedbank combined.
Wow.
That's a major shift in the banking landscape.
It really is. They're now approaching the market caps of Standard Bank and First Rand.
Those are giants.
Exactly. And for Capitec to be in that same league is a testament to their incredible journey.
It's a true disruption of the traditional banking hierarchy.
Yeah.
So they've clearly established their dominance in banking, but they haven't stopped there.
No, they haven't.
They've launched Capitec Connect,
Right. Their mobile virtual network operator.
an MVNO.
Yeah.
Now, on the surface, that seems like a bit of a departure from traditional banking.
It does.
What was the thinking behind that move?
Well, it's interesting. The My Broadband article actually references a book by T.J. Stridham called Capitec, Stalking Giants.
Okay.
And it suggests that there were two main reasons behind launching Capitec Connect.
2 reasons.
Yeah. One, of course, was to offer their customers an alternative to the big mobile network operators.
Okay, that makes sense.
But the second, and perhaps more strategic reason, was to gather data.
Data.
Consume data.
Oh, I see. In today's world, data is gold.
It really is. Understanding how customers use different services gives you a huge advantage.
So it's not just about the revenue from calls and data packages.
Right.
It's about the insights they can gain into their customers' behavior.
Exactly. They can see how people are using their phones, what they're spending their money on, where they're going. All of that is valuable information.
And how could that data be used to benefit their core banking business?
Well, think about it.
Yeah.
They can use that data to tailor their banking products more effectively.
Oh, I see.
For example, mobile usage patterns might indicate financial stress or maybe a new income stream.
Go.
And with that knowledge, Kabita can offer products and services that are more relevant to the customer's current needs.
It's about creating a more personalized experience, really understanding the individual customer.
Exact.
And it's worth noting that they entered the mobile market with a pretty unique offering, didn't they?
Yeah, the never expiring data was a big differentiator.
That was unheard of at the time.
It was.
And they've since expanded their offerings to include more traditional bundles as well.
Right, so they're catering to a wider range of customer needs.
And they're doing all this as an MVNO, which means...
Yeah, which means they don't own the actual mobile network infrastructure.
Right.
They lease capacity from existing providers.
So they can focus on service and pricing without the massive investment of building their own network.
Exactly. It's a smart strategy.
And it seems to be working.
It does.
Over 1.4 million active SIMs by November of last year is pretty impressive.
Yeah, it shows they're gaining traction in a very competitive market.
So what's next for Capitec Connect? What are their ambitions?
Well, they've stated that they aim to double their active SIM base this year, 2025.
Double it.
Yeah, that's a bold goal.
It is. It shows they have a lot of confidence in the growth potential of Capitec Connect.
And they're also planning to introduce eSIM support this year,
eSIM, okay.
which will make it even easier for customers to sign up.
It's all about removing barriers, making it as seamless as possible.
Exactly.
And it's interesting that the introduction of the more traditional expiring data bundles seems to have impacted usage patterns.
Yeah, Dr. Daleen Stein noted that after they introduced those bundles, there was a surge in both data and voice usage. Yeah. Currently, the split is about 65% expiry bundles and 35% non-expiry.
Okay.
So while that never expiring option was a big draw initially, and it still appeals to some customers,
Sure.
many are finding value in those shorter-term bundles.
Right, depending on their usage habits.
Exactly.
It shows they're willing to adapt based on customer behavior.
And that flexibility is important in a dynamic market.
Absolutely. Okay, let's bring it back to the core of this investment story.
Okay.
We're talking about a R1000 investment turning into millions.
It's hard to even grasp the magnitude of that growth.
It is. But let's try. Break it down for us.
Between February 15, 2002 and February 1, 2025, Capitec's share price grew by an astounding 558,024%.
558,024%.
That's over 500,000%.
It's hard to even wrap your head around that number.
It is.
So let's make it tangible. For someone who invested that initial R1000, what would it look like today?
On February 18, 2002, the share price was R.55.
R.55.
With R1000, you could have bought roughly 1,818 shares. Now fast forward to February 1st of this year, 2025. The share price was R3069.78.
Okay.
Those 1,818 shares would now be worth approximately R5,581,418.
R5,581,418.
That's incredible.
From 1,000 Rand. It's almost unbelievable.
Powerful example of what long-term investment in a successful company can do.
But of course, it's easy to look back and see the opportunity.
Right.
What were some of the signs early on that might have suggested this kind of potential?
Well, there's no guaranteed formula for success in the stock market.
Right.
But some things to look at are the company's fundamentals.
Okay.
Capitec's focus on an underserved market, their disruptive low-fee model,
Right.
and their consistent growth in customer acquisition and profitability.
Those could have been signals.
They could have been.
It's about understanding a company's competitive advantage.
Yeah, what sets them apart?
So the key takeaway here is the power of long-term investment.
Exactly.
That initial R1000 in Capitec is a perfect illustration of that principle.
It really is. It shows what can happen when you invest in a company with a strong foundation and a clear vision for growth.
Capitec's journey is a fascinating story of how a business can transform an industry.
And it raises an important question.
Oh,
What other sectors or companies today might have that same disruptive potential?
that's what investors are always trying to figure out.
Exactly. What are those hidden gems that could be the next Capitec?
It's about looking beyond the hype and the short-term fluctuations and focusing on the fundamentals.
The things that drive long-term success.
And I think Capitec's story reminds us that even seemingly modest beginnings
Yeah,
can lead to truly extraordinary outcomes.
absolutely.
Thanks for joining us for this deep dive. We'll see you next time
See you then.
on The Deep Dive.